Okay, it is 2 o'clock on February 15th. I hope you guys had a great Valentine's Day. Um, Want to go over a few things with you and do a quick training on the way that you're supposed to use your edges to make money and to do it safely. Actually, like you want to make sure that your edges keep you safe, right? All right, let me switch this. Actually, let me pull chat over in case you guys have any questions, or if I don't maximize or something. Okay, I've got chat, and here we go. All right, everybody can. Let me maximize this real quick. All right, everybody should be able to see this. Now, if you can't see it, just put it in chat and let me know. All right, so before we get started, do I need to define what an edge is in the market? Put a two in if I need to define an edge. Do you guys all know what an edge is? Okay, so here, what an edge is it's something that you've created or you've learned from a mentor or something that you use in the market to find plays and keep you safe. And we'll go through a couple edges um, within this, but what's the most popular edge we use in here? Yes, this is being recorded. One of the most popular edges is the trend pattern squeeze, right? Another one of my edges is the 1.5 play. We've done that a lot the last couple weeks, right? Because of earnings, right? I've got earnings edges. I've got 5 different edges that go with earnings, right? We've got second day plays. We've got chart plays, which is technical analysis. We've got open range breakout. We've got unusual option activity, right? We've got strong offering. We've got long term investing. We've got max pain. And the list goes on and on for my earnings, right? I have a bunch of earnings that I can use at different times. Okay, now if we're going to understand how to make money within the market, what we need is example after example after example of how we've used this edge to keep us safe and to make us money. So the first thing is identify edges. So if you guys don't have an edge that you use, basically what you're doing is you're coming into a bar, you're chugging back a few beers, and you're taking the darts and you're throwing it at the dartboard, and wherever it sticks, that's where you're investing. That is not a repeatable pattern of success. Okay. You may make some money, you may lose some money here and there, but in the long run, you're going to lose. It's just the way it works. Now, once you've identified what edges that you have that you like to use, then you use that edge in the trade and make sure that you're controlling the risk within the edge. And then the way that I do it and the way that I teach people to do it is to tier in and to tier out. What that means is if we're using the TPS method, I'll say, hey, I'm going to buy here, 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 and here, right? And so on one that I did live with you guys was this one, right? And so before this big candle came in, which was earnings, we had a plan to play into earnings. And do you see how many buys I've got here? I've got 1, 2, 3, 4. I've got 5 buys on into this, right? Now it didn't fill all 5, right? It only filled the 3. And so as I get filled, I'm buying support and selling resistance, right? As it goes up. That's tiering in and tiering out. I never go all in. What I mean by that is, let me throw my entire account at this because it's a home run, right? And that's a losing strategy. Now, if I'm playing a smaller account, I will do that sometimes, but that's because I have earned the right to do that by trading bigger, right? So if I'm trading with a $10,000 account using max margin and putting in $40,000 into a trade, I can still control that risk pretty easily because I'm used to trading with 7, 8 figures, right? It's not that big of a deal. So if you're really trying to earn money steadily, grow your account, you should never go all in, because no matter how good the play is, there's always those chances that it doesn't work. And if you're risking a lot, all of it, then eventually you may win 9 in a row, but that 10th time you go all in, you're going to lose everything. And then what you do is discipline and emotional control. So do you guys remember the quote that I gave you guys in the training earlier this week? It's not brain power. People that can't make money in the market, it's not because they're not smart enough. It's not their brain power. It's their emotional control and discipline. They lack that. Okay? All right, any questions on this so far? Yeah, there's other edges I don't have in here, like Inside Candle, and I use a lot of edges, right? And now I rarely use all of these. In fact, I never use all of them at the same time. It's just as the market moves, I have to move with the market, right? Whoops. Okay. Now, it's called the TTM squeeze. So this indicator down here is the TTM squeeze. And so what we were playing was the 195 TTM squeeze, right? Now, so the next step is you just find a company in a chart that you like, that you want to play, right? And then find how you can apply one of your edges into the chart you want to play. Guys, this is huge, and I want you guys to really read this, and soak it in, okay? There's other ways you can do this, but the way that I trade is I find a chart I want to play. I don't search for TTM squeezes. I don't go on FinViz and say, hey, let me find a TTM squeeze. I don't go anywhere besides my master watch list, and if you guys put something in here. So literally what I do is I come over here and I say, all right, here is my master watch list. I'm going to screenshot this as well, or snippet. And I've got my favorites. I've got the ICBs. Everything that I have is within this area. So here. Let me make this a little bit more visible. Okay. So can everybody see where it says master watch list, and you've got all these names, right? Now, what I do is I keep my master watch list and my favorites, and I'm like, these are charts that I would like to play, right? So here, let's just use Netflix, right? So do you see how Netflix has 0 squeezes on it? Do you see how there's no green checks on Netflix? Yes, it is, Riggs. So if I look at Netflix, can I play Netflix using the TPS method right now? Can I come in here and say, hey, let's jump in Netflix on a TPS whatever time frame? No, I can't. I just can't do it. You can't play it. You have to wait. All right. Well, is there another edge that I can play Netflix? If I really, really want in this chart, let me see if I can find something else. What about maybe we're getting a 2 hour inside candle? We could play that tomorrow morning if it breaks. So you find charts that you want to get in, and then you find edges that allow you to do so. Not the reverse. You don't find a chart that happens to have the TPS, and then you're like, oh yeah, let me jump in this. It's not the way I trade. Now, the reason that I have a master watch list is because these are companies that I know are good to decent companies that are going to have buying power as the price goes down, meaning people are going to find value. I don't want to play charts that have like no buying power, and as they go down, people are just going to get out of it, and we're never going to bounce like Gevo, right? I'm not looking at Gevo to get in it. Like I'm looking at good companies like Netflix, right? Now Netflix is another good example because what did we have this week and last week? You'll notice on the weekly watch list session that I did for the previous 2 weeks, Netflix was on there. It was like, hey, I'm working Netflix. I'm getting in Netflix. This was a great one that we're willing to play, even though I think the market may be going down. This is one that I was willing to try to hold a very small piece on. And you guys remember this one? Right? This one was another one. Right? And what did I tell you on this one? I said, guys, when this starts to fire, do not take profits early. We're going to go. And we're going to really go. Right? And you literally had in the stock a 50% move. Right? So what I do is I find companies that I want to be in, charts that I want to be in, and then I apply my edges to them. Is there any questions on this? This is huge. Okay. So once you find the company or the chart that you want to be in, this is how you start. You're like, hey, is it a 1.5? Is it an earnings play? Is it a second day play? Is it a chart play? Is it an opening range breakout? Is it a strong offering? You just start applying. You start applying your edges to it. Okay. Let's see. So what I'm going to do here is I'm just going to show you a few examples. And then we'll do a live one, okay? Do we see an edge I can play on this lovely chart of SHOP? Do you guys see an edge that we see here on this daily? Right? Well, yeah, you're just starting a TPS. And actually, if you went down further, you actually had lower time frame squeezes as well. Right? So, yeah, there's actually an edge that we can apply here, right? So, if I was going to play this as a TPS method, what would be the next steps? What should I do now that I've identified an edge that I can play? And you guys that have been trading with me for a little bit longer, you should know this. Yeah, Mark, you got it. Yeah, you got to find some VP levels are simply support and resistance levels, right? So you got to go in there, you got to find your support and resistance levels. You got to go in there and find VP. Mark up the chart. Now, do we see an edge on this weekly chart? This is a weekly chart, right? Do you guys see an edge here? Well, what do we call this over here? This is a breakdown and a reclaim. So this is a rev strat, right? So a lot of times you guys will hear me say, man, this one's lining up really good. I've got an inside day. I've got a TTM squeeze. I've got a rev strat on the weekly. I've got us with a shorter time frame TTM squeeze stacked up against the resistance here. And there'll be a lot of check boxes. So think of a chart, and if you the more checks you can get on a chart, the stronger I want to play it. So if I can find all of these reasons to play it, that moves the chart from, let's say, a C to a B, or a B to an A, or an A to an A plus, right? And so it's like, boom, here we go. Let's just really build into this. Now, do we see anything that could possibly form if you're just looking at the chart here, right? What could possibly form? Well, when I first looked at this, what I saw was, well, look, what is a failed breakdown? What does it usually create? It usually creates a inverted head and shoulders, right? And so, man, if this can pull back and create an inverted head and shoulders, yeah, I love it, right? So do you see how many edges I'm kind of mixing together to create a plan, to play shop, a chart that I love, a company that I love, that has earnings coming up, right? Like everything is earnings run into, like all these things are starting to line up, right? Now, once we've identified all the edges, we find our support and resistance levels, right? It's like, hey, where should we buy support and where should we be selling resistance? Well, you can see pretty clearly on the chart where the VP levels are, right? Now, what do I do? What does absorb mean? Do you guys know what absorb means? Let's go back to the very beginning of the. Do you see this tier in, tier out? That's all absorbing means. It means tiering in. Absorption means I'm not buying my full position at one particular level. What I'm doing is I'm finding a zone that I want to buy in. And my zone was between these white lines, right? So maybe I buy 500 at the top, 500 at the bottom, and then 500 in the middle, and then 1,000 at the bottom, right? And so I need shop to stay above this bottom line for me to feel safe, right? Okay. Now, after Monday and Tuesday's price action, you can see I had some nice buys and sells. So this is the way that I trade, right? We get a nice pullback to this top line. I buy, and then I sell into double tops and rejection levels up here. And then I decide, do I want to absorb all the way down, or do I want to trail stop out and then set up new trades? You'll have to figure that out with your risk profile, and all it has to do with is your sizing, right? So for me, I was absorbing. So it's like buy, sell, right? Buy, sell. Now, one of the things I want you to understand about these, do you see these buy, sells over here? What I'm doing is I'm simply lowering my cost basis. So let's say I bought 500 right here. I bought 500 right here. And then I sell 500. Well, all I've done is now that first buy's cost basis is actually down here at the second buy, right? So now my cost basis is much lower. Does that make sense? Now, you can see how many times I had opportunities to buy, right? And sell. Now, just looking at this chart without me telling you what's happened, what happened on Tuesday that may benefit us on Wednesday? Can you guys tell me what happened right here? What happened on Tuesday, which is this final price action right here? No, Ken, I did not stop out on shop at all, because remember that bottom line is my stop out. Getting into this zone is what I want. This isn't bad. This is good. I love it. Yeah, the big washout. What do we call that, guys? What is the big washout? What is that called? You got it, money. It's called a rev strat. Look at this daily. Look at this daily, guys. We've got an inside candle with a breakdown, and man, it just reclaimed. So if I go back and I'm looking at this before the close on Tuesday, if I see this and I'm like, man, look, there's going to be a rev strat tomorrow. We've got a 15-minute squeeze going on here. We're right at resistance levels. This is another opportunity for me to buy. I can now play another edge within shop. I'm going to get some more shop because we're squeezing. We're going to have a rev strat tomorrow. I want to pre-strike. I want to get in beforehand. All right, great. Well, let's say I missed it. Let's say you didn't see it at close. Oh, okay, well, if I didn't see it at close, well, shoot, I got a nice rev strat here. If I get above this level, right, then what it allows me to do is to add to my position here, right? I've got another edge. So it's give me one sec. So if we break above 82 basically on this, then guess what? We've got a rev strat in effect and we're off to the races, right? Now, this is another edge we could play, set up to play and follow the rules, add to a winner. Oh. Is my PowerPoint moving still for you guys? Can you guys still see this? Yes. Okay. Great. So what a rev strat is, it's just another edge, and we can go through edges another day, but I'll tell you real quickly what it is. A rev strat is when you have a breakdown and a reclaim that starts pushing the other way, right? Reversal strategy. It's going to reverse. So what you can see here on this one is you had an inside day followed by a breakdown of that inside day and a push back up. Okay. Now, the thing that I found is the biggest struggle for newer traders is even when they do all that hard work that I just did. Whoops. So like we've been trading shop, we've been buying, we've been selling, we've got a great cost basis. Once shop breaks and it goes to like 85 or 84, they're like, woohoo, we did it, I'm out. And they take like either all their position off or they take like 95% of their position off, right? They just don't let winners run for whatever reason. And what I continually tell you guys is when I'm playing within a zone, this zone that I'm playing in, and I'm buying and I'm selling and I'm buying and I'm selling, I'll make so much more money on this big move, even though I'll probably only have half the original position, because this is the hard work. I've dug the ditch. Why am I going to let water flow into it for 5 seconds and then dam it up? Right? I'm just going to let this sucker go. I'm going to let this sucker flow. Right? And so this is how I partial out. I'll partial in and I'll partial out. Right? So for me, a partial is at a double top. Another partial is the 127. Right? And then you can have your other strategies of how you guys partial out. But I'm partialing out. And I usually get trail stopped out, meaning it'll pull back, and I've set a hard stop, a trailing stop, and that's usually how I stop out of the rest of my position. Now, if you've got earnings or something like that coming up and you're not planning on holding through, you just have to get out, okay? But you can see, like, if we did all that work and we sold at 85, well, we went up a whole nother 6 points, right? This is what we do. This is how you make your money, okay? And here's another idea from last week. Now, this is a completely different edge, right? This is a different edge that I use. I've got support levels on Google. Why am I willing to buy Google down here? Why did I buy Google on the dip last earnings report? Does anybody know what edge I am using? Uh, Goku, they're just they're symmetry levels. I'm not symmetry levels. Fibonacci levels. That's the word I'm looking for here. So if you were to take, a Fibonacci projection level and throw it in here, your 127's right here at 82, right? Your 150's here. Your 161 is here, right? These are common levels that people start to distribute. And here, I'll give you a close-up of that. So you can see I put in the Fibonacci, and these are those levels. That's all that means. Okay, yeah, value. Value's the play that I'm using on Google, right? I think Google's going to outperform this year with Amazon compared to like Microsoft and some of the other Magnificent Seven. Um, and so I'm playing a value play. Now, if I can combine it with something, great. Well, what using these three candles, what has happened on Google right here? Over here on the right with Google, what play just set up on the daily time frame? I am Sharky. Yeah, Mark, you got it. It's a rev strat. I mean, this is a rev strat from the word go, right? You had your inside candle, you had your big breakdown, and now you just ripped. Huge rejection, right? So even if you didn't absorb and wasn't playing as a value play, there's another edge that you can apply to this, right? And this is how you decide how you're going to play charts, right? You simply find a chart, a company that you like to play, and then you apply your edges to them, right? And then you're off to the races. And are there other edges? Look, there's another inside day, right? Like there, you can always find a way to play your chart if you have a bunch of edges. And the reason that I have so many edges is because when I want to get in a chart, I want to get in it. How many of you guys have ever seen Mr. Bear say, hey, this is a beautiful chart, but it's already gone? I can't do anything with it. Right? That's him flexing his discipline. He's saying, you know what? I'm not touching this until it comes back to the ADMA. Right? Well, I'm a little bit more aggressive than Mr. Bear, if you guys haven't noticed, right? I'm a little bit more aggressive. And so what I'll say is, yeah, it's gone. I can't play it as a TPS, but it is an inside day. So if we break up, I can play this breakout. An inside day means the candle just traded in a range that was within the previous day's range. So if you look at this where I'm putting a circle on the screen right here, do you see this candle right here? It's traded within the previous candle. That candle versus that candle. That's all it is. Okay. Yeah, I've actually got one, Todd. I can send it to the guys. Let them post it somewhere. Common phrases and stuff. Okay. Now, what I want to do now is simply do one live, right? Do I do most of my planning setups on the daily charts? No, I wouldn't say so, Mark. I wouldn't say that there's a most with me. I don't think I do anything 50% of the time because sometimes I'm doing value, which doesn't have anything to do with the chart. Sometimes I'm doing a 78 weekly. You know what I mean? Like it's I'm willing to play anything, anywhere, as long as it's on my master watch list. Does that make sense? Yeah, it does, Skater. 100%. And so, Skater, if I were to pull up, my master watch list, and I throw in the so this is my TPS plus inside candle. So do you see this all this right here, the 15, 30, 60, 78, 130, 195 daily, weekly, monthly, quarterly, yearly? This is telling me all the inside candles that are happening right now. So if I wanted to look at, let's say, a 130, I could just click it, and this is going to show me all the charts that have a 130 inside candle. So do you see how this has a 130 inside candle? Right? You can come in here and you can see all the inside candles on whatever time frame you want. So the reason that you play inside candles and the reason that you play the TTM squeeze is because all that is doing is it's showing consolidation. And what that means is the chart is resting and it's not going to be extended. So that's going to give you the ability to get range. All right, I'm going to swap this out real quick. Okay, somebody throw some charts in here, or companies, and we'll see if we can find anything that we can play. Okay, SMCI, it's a great one. So I'm actually in SMCI, but this is one that I've been having to hedge all the way up, right? So I literally have open right now calls that I've sold to open at 1,000. Now, how do I hedge this? I actually have to buy the shares. So I buy the shares as it goes up. Right? All right. So is there an edge in here that we have that we can play? Let's see. Does anybody see any TTM squeezes on it? I don't. Right? I don't see one at all. Zero. Well, is there an inside candle forming? You know, maybe if you wanted to use a smaller time frame like the 30-minute. Now here's an edge, guys, that I haven't mentioned, but do you think they're going to push SMCI to this close to 1,000 without it going over it? I don't think so. So like if I could get a 5-minute squeeze or something going on here, I'd be willing to play it. So like right here, you see that squeeze? This was the time to get in it, right? And let's push. But now that it's out, part of our edge is keeping us safe. So I just can't play it. Nope. I'm not gonna play this, right? I missed it. I don't have the opportunity here, so I have to take a pass on it. We can't get an edge that we like to play. All right, let's use another one. So a lot of people put in Amazon. Okay, Amazon. Let's see if there's anything on Amazon. Yeah, this looks like there would be some squeezes. So you're starting a 195 right now. And you've got 3 dots in on an hourly. So the answer is yes, I can play this. Right? So the next step would be what? All right. Is there any other things that I naturally see? Well, we've got a breakdown and a reclaim from today from the previous candle here. um, from a technical analysis standpoint, what does this look like to you guys? That it may be forming. Yeah, Tom, it looks like a head and shoulders, right? So it looks like it's going to come up to. It may bounce back up to here. Now, is a head and shoulder bullish or bearish? Right, it's bearish. So it doesn't mean that this level is going to reject. It's just be aware of it, right? So knowing that, what I would like to see is a rejection off of that 172.50-ish level, and then a higher hold to create more of an ascending triangle up into that level so we can break through it. Okay. So now what we need to do is we need to really break down the VP on this. So what I'm going to do is I'm going to switch back to my screen here, and we'll see if my VPs still match. So I'm on a 3-minute right now, and I'm just scrolling back to see. Yeah. So I think I can do it with a 3-minute. So now what I'm going to do is I'm going to zoom in, and I'm going to get the best detail that I can. So you can see this VP's shifted down a little bit, so I need to scroll that down to there. See, these 3 white lines were from back here, and you can see the bounces. We've hit off these, and it gave us opportunities to play these absorptions, and they've bounced. But the fact that they've hit now, it kind of takes away the strength of this support zone now, because instead of the support zone being back from here, we have to find it in here now. So what I'm going to do is take those away. I'll throw one in here just to say that's the main spot from all of them. And then I'm going to zoom in to the ladder on a 1 minute. So I really want to check these guys out here. So this is just the last couple days. Now, what else does Amazon fit into? What other edge does Amazon fit into? Right? It had good earnings. It's a value play. Remember, this is one that I think is going to outperform over the year. So the more this price goes down, the more valuable it becomes to other people. So you can see we've hit this area a couple times. We really don't want it to come back down here for a third time. So what you'd have to do is you'd have to decide, would I be willing to play this absorption zone back in 168 to 168.50-ish, right? You could move it up a little bit here if you wanted to encapsulate that. So basically between 168 and 169, right? All right, so let's switch this back to our hourly chart, and we'll see where that lines up. Yeah, I like it. I'm willing to try it. You know, here's the deal. You're coming down here for a third time. The reason I'm willing to try it is it's not clean, meaning it's not the exact level. You actually cracked below. So if we get a quick wick back to this level, I'd be willing to buy it. Okay. So this fits on our hourly TTM squeeze for Amazon. Now, here's the other thing that I want to be in if it happens. I actually want to be in Amazon even if it doesn't pull back to this level. If it cracks over this 170 level, I want to be in it. I want to be playing this. So is there a way I can do that? So what edge do I have possibly, right, setting up right here, right now on Amazon? On this screen, what edge is setting up? Yeah, it's an inside candle, right? Well, does this get me over 170? Yeah, it does. If this thing breaks 170.30, I think it's coming to 171 and it's going to come pretty quickly. So I want to be in it. Now, what I do here is, do I want to wait till 170.30? Right? Which is right here. Is there enough VP to start holding me down? And so I start looking at this from a technical analysis perspective. If we don't get that pullback, meaning if we don't come down here, which is where I'd like to get it. Well, if we start breaking out here, I want to be in it. So what I'm going to do, I'm going to go ahead and put it in. I'm going to go ahead and put in an order on Amazon that if we break up 170.05, I'm going to buy some shares. And then I'm going to absorb back down to 169.50. Okay? Now, what am I playing here? This is a VP technical analysis play. It's setting up to get me into a possible ICB on the 195. If it stops me out, what edge can I play? I'm going to play the hourly TTM squeeze. Does that make sense? So no matter what happens on Amazon, I'm playing it. I don't care what happens. It goes up, it goes down. I'm in. And do you see how I applied this with my edges to keep me safe? I've got multiple edges that I'm using here to say, this is what I'm doing. If it goes up, this is what I'm doing. If it goes down, this is what I'm doing. Right? Like everything is put in here. And no matter what, I'm playing Amazon. Is there any questions on this? So whoever put in Amazon, great play. Daryl, where would I put my stop? On which one, Daryl? So this upper buy, my stop's right here. I don't want to start putting in lower lows and ride it all the way back down to here. You could. There's nothing wrong with that. If you're like, you know what? Does this fit? So here, let's look and see if it fits on the hourly. No, it doesn't actually. You'd have to wait for it to get below 169.48 to play the hourly. So for me, it's kind of like you're mixing boxes here. I'm playing a technical analysis. We're going to break out here soon. And this 169.50 VWAP area is going to hold today. And we're going to push into close and into tomorrow. That's going to rip us up and out. If that doesn't happen. So let's say it pushes up to 160.35 and I'm in. And then I buy at 169.75 and 169.50. And then it comes down to 169.25. I'm out. I'm done. I'm just stopping out. And then I'll set up a whole new trade right down here. And I'll use the stop out per the rules on the TPS, which is the lower Bollinger Band. Does that make sense? So here's the play on Amazon. You ready? We've got a beautiful little, flag out. It looks kind of bearish, right? It may reject, but you've got the breakdown right here and the reclaim. So hopefully we've washed out all the sellers. So I'm looking for Amazon to pull back on an hourly time frame to get long between 168 and 169. If we get in between 168 and 169, I'm getting long. According to the TPS rules, you could get long as soon as it cracks underneath the 8 EMA. Right? So that's the pullback play. That's it. Now, if I'm not as patient and as disciplined as Mr. Bear, and I'm like, I gotta get in this. I want in this if it breaks up. Well, shoot, do I have an edge that allows me to do that? Yeah, I do. I've got a few. I've got a 1 hour inside candle here, right? If we break up out of this one side candle, I've got a beautiful, little pennant being formed here right in between major VP levels. So the over under level for me is 170.04. We start breaking above that, I want in. We've got a 195 inside candle. So we've got a bunch of different edges that we can apply to this to play it. The next thing you do is you keep yourself safe. If I'm playing a breakout, I do not want it to come back down below VWAP of today and or the lows and start putting in lower lows, right? I want this trend line to hold. So there's multiple plays here. Buying as it breaks out over 170, stopping out below, 169, 30-ish, 50-ish, and then having another entry down here. If it doesn't go down and it just goes up, all right, well, what's the profit target level? Well, first level is going to be 171, and then we got gap close up here, right? Around 172, 172.50. Once that happens, we're going to be setting up a whole new trade, right? We'll take profits into this, and then if I can get a retest back down to here, I'm adding some more, right? And this is what you're doing continuously in your plan. You're always creating if-then statements so that you can continue to add to a winner. Or if there's a chart that you really like that you want in and you jump into it, if it breaks down, where's the next absorption level that I can try to take another long shot at? Okay. All right, guys. I think I've explained it decently, right? We're about 47 in, so I don't want to make it too long. If you don't understand some things, watch this video over and over, but just go back to the beginning of the slides and remember what you're doing is you're identifying your edge, right? You're identifying the chart you want to play, right? Find a company and chart you want to play. Find out how you can play it with one of your edges. Make sure you've controlled your risk. Tier in, tier out. Never go all in, and have emotional control, discipline, right? So I don't care if Amazon goes down. I'm just going to stop out if it does, because I'm going to have a better shot for a longer term setup, because I'm going to get an hour play versus just this quick breakout play, right? And it helps to cage that tiger so that you can just play the chart instead of your P&L. All right, here let's do one more. So NVIDIA, do we have any edges on NVIDIA? Well, you guys tell me, what does this look like? My gosh. Jeez. Like, guys, I don't want to get long a lot of stuff right now. This is a chart I have to play. I don't care if I don't want to get long. I have to play it. It's just like, my gosh. It's perfect. This is picture perfect. So whoever put in NVIDIA, yeah, great find. You've got other edges here. Look at this, a 130 inside candle. A 195 inside candle. I mean, my gosh, this thing's just screaming, I'm going higher, right? Now, what you have to realize is the second half of February is historically the worst part of the year all year. It's the worst. Knowing that, can I keep myself safe, right? That's the most important thing. Can I keep myself safe, right? Well, let's break it down. So for me, what I need to do, my gosh, this chart is so pretty. Like, if you guys Just print this chart out and throw it on your wall. If you find charts like this, I mean, beauty. All right, so the first thing that I want to do is really identify you've got here and here. So I'm identifying some pullback zones. And you want to identify when the chart breaks, right? Where it's like, okay, it doesn't look like it's going to be a long anymore. Now that is your main point of control. And then you've got up in here is your, and then I'm going to throw one more here just to let me know that there is a chunk of people in here. And what I'm going to do is I'm actually going to slowly zoom out. So you can see that point of control is actually shifted down. I need to move it down. And then that one's there. Yeah. I just need one more up here, and I think these levels are good. All right, I got my levels. So, if you're looking at this on a 78-minute chart for this beautiful 78-minute squeeze, we're actually supposed to wait until it comes back below this green line, which is the ADMA. So you could put in an order to buy NVIDIA, you know, whatever you want to play, option shares, however you like to play, between 727 and 730, because this is your main point of control. And you can absorb it all the way down here if you want, because technically that fits. For me, the way that I would be playing right now, I'm not playing NVIDIA below this point of control. If it does a quick wick or something like that, that's fine. But I don't want to be absorbing NVIDIA into weakness, into a weak part of the year, which is next year. So for me, to keep myself safe, this is where I'm going to be absorbing, right? So I need it to work relatively quickly. You know, tomorrow, Monday. If it doesn't, I just stop out. That's fine. Now, let's say it doesn't pull back. Was there another way I can play it? Yeah. Right? We've got all these inside candles. Well, we could play the 130. We could play the 195. Right? So if NVIDIA on Friday breaks above 734, I think the odds of it coming to 737 is pretty high. So I could take out 3 points there. Right? So these are the levels, and this is what the levels look like for me. I do not want to be playing NVIDIA below basically 727. And what that looks like on the 78 is right here. So do you see how we just set up a trade on that? Yeah, markets are closed on Monday. They are. Yeah, you can play it any way you want. So, guys, one of the things that I don't do, sometimes I will, I'm not going to handhold you and tell you, hey, buy this exact option and this. I'm just going to tell you I'm getting long, I'm getting short, and then you have to figure out for yourself, because you're an adult, that what do I want to do? Do I want to buy a put? Do I want to short the shares? Do I want to buy a call? Do I want to long the shares? Do I want to put in a spread? Right? Like, that's for you guys. Me doing that for you is not good in my opinion, because you've already got somebody doing that for you in Nate, right? You don't need another person doing that for you, right? I'm letting you expand your wings and say, hey, if you're ready to do this, go for it. Give me one sec, guys.